Welcome back to The Income Generation. I'm David Scranton. Today's host is being piped in from Singapore. He actually co-founded the Quantum Fund with George Soros. He is a lifelong investor, entrepreneur, author, and all-around cool cat. This particular individual actually rode his motorcycle through more than 100 different countries. If you don't know quite yet who I'm talking about, it's the quintessential bull in China, Jim Rogers. Jim, welcome to the show.
I'm delighted to be here, David.
You know, I introduced you as the quintessential bull in China. I know for many years, up until recently, you've been lukewarm at best on the United States, investing in the United States, I mean, and, very hot on China. But your recent blogs seem to indicate something a little different. Talk to me about that, please.
David, over the last year or so, many countries in the world are having problems. Japan, for instance, is in recession. Many countries in Europe, as you well know, are having problems. Well, China trades all over the world, and if their customers are in trouble, they're starting to slow down. Unfortunately, this is starting in the West, not in China, but it's affecting China. Now, China also has a lot of debt, which they did not have back in 2008. So things are going to be different next time around.
Okay. You hear about, a lot of people say there's a huge bubble going on in China right now. You hear the stories of cities filled with empty buildings that are as large as Manhattan. Do you think that there's potential there for that to be a pretty significant bubble? Or do you think maybe just a pullback in the Chinese markets?
There's some bubble. There are bubbles in some property in China, especially in the coastal cities. There's no question about that. But the nation as a whole, no. The nation as a whole, there are many parts of the Chinese economy that are extremely sound right now. China has huge international reserves. The United States is the largest debtor nation in the history of the world, David. I'd rather be with the largest creditor nation than the largest debtor nation in world history. But I want to emphasize again, you're going to see some of those property people go bankrupt. It'll be good for China and good for the world if they let it happen.
Sure. A bit of debt cleansing has to happen in every economy at various times. You and I both know that. So, okay, we've spoken about the economy, but how about the stock market? The stock market isn't as efficient there as it is here in the United States. Do you have bigger concerns about the stock market perhaps being in bubble territory?
Oh, no, the stock market is certainly not in bubble territory. Stock market is cheaper on a price-earnings ratio, for instance, than the U.S. stock market. The Chinese stock market in 2015 far outperformed the American stock market, which was down in 2015. Stocks are up, and they're going down this year, as they're going down all over the world. But no, they certainly weren't. Stock market was not in a bubble. Maybe some stocks. There are always some stocks everywhere that get into a bubble. But no, the market as a whole was not in a bubble. That does not mean it cannot go down, David.
Of course,
if the world goes into recession, everybody's going to suffer.
So how about the concern some people have about manipulation? There's the Chinese stock market takes a major drop, and then the government steps in and starts to buy back shares. It seems like a lot of times there's a lot of people inside China that are starting to sell, that are driving that down. There's discussions about people potentially getting arrested for selling in mass in China. Talk to me about that in terms of the level of manipulation that happens by the really in the Chinese market by the government and so on, and how that in your mind affects the markets.
First of all, if we talk about manipulation, the Federal Reserve in Washington, D.C. has done more manipulation in the last few years than any government in the world. They've spent trillions of dollars manipulating interest rates and the markets. Now, yes, China has entered its stock market. The Chinese government entered its stock market last year. I find that I would not do that if I were China. I have learned over the years that any time there's artificial interference with the market, it leads to unstable conditions later. China, in my view, they should let the market hit its bottom. The best bottoms are the ones where they collapse, find their own rock-solid bottom, and then start over. So in that sense, in my view, China made a mistake.
So it sounds like if there were one place where you were more concerned about a bubble, it would be more with the levels of the Chinese stock market than it would be with the actual Chinese economy. You seem pretty confident in the economy, but it's possible that because of this propping up of the markets by the government, that there could be a bubble in the stock market, but not so much the economy, in your opinion. Is that correct?
Well, the stock market may well go down, but David, I want to repeat, I have sold short the United States stock market.
Right.
That's where there's a bubble. If you look at companies like Amazon and Netflix, I mean, those are real bubbles. And the U.S. stock market was down last year, but it would have been down a lot more if you hadn't had, 5, 10 stocks. It just never went down. There's your bubble if you're looking for a bubble. Chinese property in some sectors is a bubble. American technology stocks, that's a real bubble, and that's where I have sold short.
Well, let's talk about the U.S. then for a while, because I know our viewers see and hear me week in and week out talking about my concerns about a stock market bubble here in the United States. Tell me more about your thoughts as to why there's a stock market bubble here and what investors can expect if they're investing almost exclusively in the U.S.
First of all, the American stock market as a whole, on the averages, is over 20 times earnings. Now that's high. That's historically high. The Chinese stock market is only around 12 times earnings on an average basis. So the American stock market is much more expensive. The American stock market is at near all-time highs, as you know, David.
Sure.
The Chinese stock market is 50% below its all-time high. That's where the bubble is. And if you look at those 8 or 9 stocks, they went up every day. They never went down. They don't have much earnings. They're selling at extremely high prices in the market. Most stocks in America went down in 2015 because the market understands that there's a problem developing in the American economy. That's where I see more problems. And in America, as you know, almost 50% of the people own stocks directly or indirectly. In China, only 8 or 9% own stocks. So America's having much more of an effect on the world than China is.
So you can argue that there's pent-up demand for stocks and investments in China, whereas in the United States, potentially, as baby boomers age, they might be pulling out of the stock market, going to more fixed income. So, and that's with a 50% saturation today. Tell me.
That has happened throughout history.
Exactly. Now, okay, how long have you been short on the U.S. stock market?
Oh, about let's see, probably last fall. I'd have to look it up to be precise. But these stocks, last fall. That's when I started shorting the U.S.
Okay, so you were long in the U.S. from 2009 or 10 for the most part until last year?
I cannot figure out the exact dates. And by the way, when I say I'm short the U.S., I'm also short junk bonds in the United States. Mm-hmm. Low-grade bonds in the U.S. And I started shorting junk bonds maybe a year ago. I have investments all over the world in many places, but at the moment, the United States is the only place that I'm net short. There's no other market, and because no other market has been as high as the U.S. and where there's been bubbles, you like to talk about bubbles. Sure. I haven't seen many bubbles in the rest of the world, except in those 8 or 10 stocks in the U.S.
Now, you mentioned the Federal Reserve before. So tell me in your own words, what hand you think the Federal Reserve has had in creating any type of potential bubble we have here in the domestic markets in the U.S.?
The United States Federal Reserve, under Mr. Greenspan, started a bubble. As you know, he drove interest rates to nothing. He told people that they should buy houses and they should have adjustable mortgages. So he sent us into a housing and consumption bubble that popped in 2007, 8, 9. And now this crowd at the Federal Reserve has kept interest rates at zero for 8 or 9 years. That is not normal, David. That's not the way the world works. Never in history have interest rates been so low. So that's where the bubble is. It's created by the Federal Reserve in the United States, and that's why U.S. stocks are at all-time highs.
And our viewers, by the way, consist of what we call the income generation, which is people over 50, primarily the baby boomers who are starting to make that transition from investing from growth to income. So we're constantly watching interest rates. I'm personally skeptical about Janet Yellen's ability to raise interest rates to the extent that she's saying she would like over the next year or two. Tell me what your thoughts are about that.
Well, what's going to happen, David, is somewhere along the line, the markets are going to really react. Let's say they go down 13%, 18%, you pick the number. They're going to be down. People are going to be calling Washington, begging, screaming, talking about the end of Western civilization. Mrs. Yellen and the people at the Federal Reserve, they're not very smart people. That's why they work for the government. I mean, they're going to panic. They're academics and bureaucrats. They're going to panic and come riding to the rescue. They'll print more money, lower interest rates, take interest rates to negative, whatever they have to do, because they don't know what they're doing. They don't know that you need to have corrections in the market periodically.
Yeah, it's true when you say academics. You know, I know you're Yale and Oxford educated, but you have boots on the ground, street smarts, and that's the most important thing for investors to listen to, is people who actually do it every single day. So, Jim, we are unfortunately out of time. It's been my pleasure having you here on the show. I really appreciate everything you've said, all the wisdom you shared with our viewers, and hopefully like to have the opportunity to have you back someday.
I hope so. You didn't have to mention Yale and Oxford, but yes, I did go to those schools. That's how I know. They don't know what they're doing.
I love it. That's great. So I don't have to feel bad about the fact that I couldn't get financial aid and couldn't afford to go to Yale. So thank you for that. All right. Thanks so much.
Thank you, David.
All right. Well, stay tuned. We're to come back, and Marty's going to have her report. We'll be right back.